The Bitcoin prices have been going wild, ladies and gentlemen. Welcome to the show. My name is Rocky Outcrop, and the current Bitcoin price you can see just below here and up on the screen at the minute. We're looking at BTC USD price $53,642, ladies and gentlemen. Well, that's a lot different to where it has been recently. Let's just take a look at where it has been at the highs not that long ago. Here up on the 4 hour time frame, we can see that the high price was in here at $58,000, and then the low price for Bitcoin came in here at 47,388. Some people were paying $58,000 for their Bitcoin here at just, what was that? Let's see, 4 o'clock or so, and then down here they were paying at 8 a.m. the next day, $47,000 for their Bitcoin. And right, and right now we find ourselves more or less back in the middle of that, and we'll be looking at other coins as well, ladies and gents. So oh, what's happened there? Oh, Lord Veroven. Lord Veroven. Yes, Lord Veroven. Thank you so much for that 199 tip. Nice one there, my friend. How you doing down there? Kirky boy, you doing all right? I hope everybody's been getting on all right with the recent Bitcoin price action, and of course all altcoins have had a bit of a rock recently. How did you fare yourselves on board the spaceship here, guys? What's that you're saying? Everything went well? I've just got this red shirt on in here in honor of all of the new entrants into the market recently at that $58,000 price who had to watch the prices drop down to $47,000 for their Bitcoin. So I'm just wearing this red shirt here. No joke intended there, Kirky. Yeah. So you say that you handled it all. I have this photo over here which says otherwise. I can see this is where you were trading on your Bitcoins last night there. I can see your reaction, Kirk, was to run over here and push their faces into the monitors. Well, why so many monitors, bro? That's all I can really say to that one. We're going to be talking about the few things in this show today. Of course, the prices of these coins, and we'll be talking about how you can get involved in the cryptocurrency, which I'm sure you're all really looking forward to hearing about. And you can then give feedback and everything else. There's different ways of getting involved at the minute. And of course, as well, I'm trying to put together a way of actually starting to run the investment round, the first round of funding for it. Hopefully this week, but we'll catch up with that, of course, throughout the week and talk more about it in the Discord down below. You can get in touch about that if you like. Dan Anthony, yeah, sweet. Cheers for that. Your favourite show is on. Good times, excellent, good times, everybody. Yeah, just having a laugh there with Captain Kirk. I hope you caught us. Hope you caught us doing that. So, what is this chart that you have open here, Rocky? Show us the extent of our misery. Well, we can see that the prices here on the 4 hour time frame in the collapse, we could say, came all the way down towards this $47,000 area. Thanks, by the way, so much for that. Dan Anthony, and that was almost at this 50% Fibonacci retracement area from the Fibonacci drawn in just from this sort of departure point over here. Back when we were at 37 grand, just before kind of takeoff up towards Mars. Of course, the Mars then landed there. Bitcoin didn't like what it saw and jumped all the way back down, almost 50%, losing almost 50% of the rise up in value there, which is, of course, you know, very, very, very extreme for the new entrants into the market who maybe just joined us back there looking up here, and some other people are saying, oh, that wasn't so bad, that's not so bad, and they're thinking, how do I reconcile that in my head with what I just witnessed, you know? And that's kind of the difference, you know. If your mentality is kicking off about Bitcoin from around about those prices up to where we saw this then retracement down to, That's 50%, of course, that you're looking at there. So we'll be talking about that. We'll be talking about the move up here beforehand that led to, of course, this rise, and how that how and price up towards those highs, and how that looked on the oscillators down below, kind of giving that a bit of a diagnosis for us to see if there's any lessons to be learned from that for future. And other simpler sorts of things as well, as I kind of try and keep things nice and neat in today's show, into a neat package to help everybody who's new into the market as well. Okay dokie. So anyhow, so first off, if you are new into the market, by the way, what I would say to you is this sort of volatility that we're seeing here in terms of the price is quite visible up on the daily time frame, but we've spoken about this in the recent past with regards to stop hunts, for instance, that have been happening. And you can see with the extreme wick here that there's a couple of questions to be asked with regards to how all of the markets really kind of moved at this time, and if there was a series of orders already in place for people to check out of positions at certain price points, which then led to further cascades towards the downside, looking perhaps, you know, to maybe perhaps reaccumulate lower down and then continue the trend towards the top side that we've been seeing. Or are we looking at a reversal of the trend, and, you know, are we too late to buy in, sort of questions and all that. That kind of comes to the fore when you've had volatility like this, which is visible to this extent on this sort of time frame here for us. This was the 4-hour time frame, sorry, but it's visible everywhere you go. So there's a couple of different stories to be had at the minute. One of which is that the move previous to here was what we talked about in the premium section of the Discord, and of course here on the channel as well, discussed similar concepts. And that move up to the A point actually has all kind of happened, and we talked about that, and that's great. Okay, so that was that part, and then we came down, and we are looking at a couple of different moves, perhaps, you know, with regards to retrace and re-entries after having already taken what we wanted off the table in terms of the first move up there, or indeed wherever you happen to be managing your own risk around. And that conversation will continue, and we'll be we'll discuss, I suppose, if you want to go and join us there over the next wee while, the next sort of ideas that we have in the market. But let's just check in with this in a broad stroke picture analysis right now, so that we can understand exactly kind of what the situation is with regards to the last move up here, the last big departure point for us. And that was down here at the 37,000 area, and the high then was up here at 58,000. And the prices dropped down almost to the 50% area, but then rose back up, and they're now above this 236 here. That might all seem a bit overwhelming, but what I'm talking about there is Fibonacci retracements. And you can look up Fibonacci retracement stuff all over the internet. TradeSpotting himself has got a good video about it, so check out TradeSpotting, his channel. He's in the chat there as well, and it's, you know, and it's based off of simple sort of mathematics concepts that were discovered by Italian dudes and whatnot back in the day. And the so the same sort of stuff that you see in a spiral of a snail and all the rest of it can give you an idea as to where the market goes. So it's not much hocus pocus really, though, when you think about how consistently these things actually seem to have some significance to them across time, and as well because you're able to do a couple of different things at once with them. And we'll do one of those right now here to give you a wee bit of insight. But you can draw them from one area to another. So this one, this started off drawn in here from the left down at this point, where just before we kind of took off towards the top side at 37, and then finishes up at this point up here. And we can say that if the prices were to close below the 236, then there's a sort of 80% chance that they're going to go on down towards one of these levels down below. Now, it has done these two already, more or less, but it hasn't gone as far as gone down to the 618, which is what would, you know, take over most of that, where most people would look to kind of for profit taking from a sort of generic sort of Fibonacci point of view. So this is a common area, if you like, okay? And that never got fulfilled. So is that still on the cards? Is one of your questions that you've got there. And how and you know, where are we right now? Well, we're above the 236, so we don't actually still have that chance that currently of this of going down, so long as we can stay above this price point. And this price point here is 52,613. So we can also look at this from the other sort of direction as well. Bearing in mind, this was the last move up, this move up that we're doing a retracement against, going from the left to right, doing the move up. Let's just look here from the move down to the to where the wick down came to, and you can see that currently, right now, we're at that price point in terms of the retracement back up the way since. If we jump down the time frames, that becomes more evident in terms of where I drew that in from for you, and you can see that we have retraced back up as far as, in terms of this body closure, the 618, okay, and that comes in at around about the 53,700 price point. So there's your two kind of your two price areas to be thinking about. If the price is retraced back down past this area, then perhaps we've fulfilled the move off the back of this Fibonacci. But as if they were to continue to go down past this point here, continuing the move, which we're the first initial move we measured there, just continuing that on and then going back down past all these other points, what would we want to see this stay up above to say that it's above its 236, and the inverse of what we just looked at there now, and that comes in at 49,600. So going beyond that would change the story here quite significantly, and that is, of course, going beyond the 50% area of the larger Fibonacci, which then takes you on down to that 618. So there's your kind of your story there. I know that might be a little bit overwhelming in terms of the information, but it's just looking at a couple of Fibonaccis against each other with the proposition in mind that if you, however likely you are to go onto other targets as a sort of percentage idea, and a couple of them against each other, then to kind of zone that out for you, and you can kind of take it from there in terms of what you want to interpret from that, really, if you go and look at Fibonacci stuff, right? And that gives you something to go off of. Wee lesson for the week there. We don't need to go into any more education at all throughout. In fact, I'll tell you what, I'll start making them clips there for the show here that I like to publish in the old Statico videos as I get up the chat and check in with everybody that we've got on the go here. So very good to see you all. Goat Ninja, one of the patrons. Thank you so much for being a part of that crowd, I believe. Correct me if I'm wrong, but I think that's right. And let me see, Lord Verovan, yeah, great to have you here. TradeSpot, great to have you here. And John Range, good to see you here. Way down, average buy-in for Ethereum 1905. Luckily using low leverage. Honestly, should have set stop loss much higher. If it goes to 1380, I'm wrecked. Hail Mary, lol. Well, you're saying a couple of numbers there that we know from the show already, don't we? So we'll be checking in with Ethereum there and seeing how that kind of lines up with what you're talking about overall for us. Dan Anthony, do you think this was manipulated or more of a natural drop? Well, let's just do the first immediate thing that you got to do in this instance when somebody kind of asks that question and say, what we're looking at here is a 20% drop from its high point to its low point. And while, of course, that happened very, very quickly and initiated probably a lot of liquidity in the opposite direction, steering into the skid, if you like, actually, that liquidity, pushing the prices on further down for people who could perhaps potentially have worked it out, using some schematic or just kind of getting in here at the 20% roughly area drop down after having initiated something like that. Maybe even buying the whole drop up from whatever point, from 10 up, if that was what their sort of strategy was at the time, if they knew what they were doing at the time, that would be the manipulated one. And the natural one is saying, well, how out of bounds is a 18, 19, 20-ish percent, let's call it 20% drop, how of a much of an outlier is that for us here? And the logarithmic chart makes this somewhat easier because it's percent based, essentially. So I can take a measuring stick off of this. Nice red measuring stick for us. Go, well, we had this 18%, 20% rise up in price here. Let's just double confirm what we're saying. Of course, this is the drop down is about 20% there, so that's a rough about 20% if in terms of measuring it down the way. Of course, they didn't do it towards the top side because that comes in at 27. You know how percentages work, yada yada. So what we're talking about here is something similar. This is a bit less actually in terms of that, and yeah, so it's not, you know, that out of bounds in terms of what we've looked at recently after what could be highs in the market. Now the question, like then, as I said, I got my initial sort of thesis, if you like, is will we see something similar to what we have seen in the recent past? You know, just comparing the drop here, looking at this sort of thing. And now this isn't me drawing out some sort of fractal by, you know, or anything like that, but I am going to point out the ideas, the simple ideas that we always talk about in this scenario. If you're new to the channel, welcome. Like let everybody know, everybody here, if you could all hit like minimum once, maximum 3 times, you know. And sort of idea, let's see if we can get some more people to come and join us for the stream, because that'd be good to see. Nice to see you, Danny Morgan. So anyway, what we've got here is this drop overall, and is it indicative perhaps of the initiation of something like this? Well, it could be. Certainly shows you about the sort of the fragility of the market, if you like, in this region, having followed on from rising up in a wedge format, which exceeded expectations or broke towards the top side to some degree or another, like we've seen several times in the past. You know, if I just take this from here, so if you remember back at this point when we were drawing, I've got the anchor on here, so that's not helpful. If you remember when we were chatting over here about these sorts of ideas and saying you've got rising wedge, could break up, yada yada, right? And then we've come up subsequently and then consolidated for a while and moved up past it. Could it be the initiation of something like that? Well, it could be. Or could, of course, that be it all over? Well, that's the question that would be on the edge of everybody's lips. You know, if you're wearing a red shirt, my heart bleeds for you, of course, absolutely. If you were wearing that's a Star Trek joke, but if you're still with us in that sense, then cool. And what we want to see is the prices at the is to really go past this area towards the top side, or else, you know, at the very least, you know, not break down past the 52,780 area in terms of how you manage the whole buying and selling of your risk in this region. You know, for now, just look at, you know, and not to fractal type idea, but just the general idea of you don't want to go past your previous lows. All right, so you want to set in a low at some point somewhere along here, and then hopefully not break that low again, and instead go up and break your previous high at the most sort of essential cornerstone of charting right there, essentially, right? Because what you're talking about here is the need to go and form higher highs and continue on the way, which is the underpinning of an overall upward trend. Now, of course, this is going to look different on a number of different time frames, and that's where the sort of the more complex, if you like, aspect of this analysis can be enlightening, if you like. So let's have a quick look at that and check in with the 24-hour time frame and a couple of little instances of the old divergence. Now we can drag this down a wee bit and make the point that if, you know, we look between the initiation of this move up, the impulse up, comparing it to the previous strength in the market here, that it is higher than the previous one. So from here to here in general, we're doing this without divergence, but we have come in for this point here, and I think when you're talking about the capability of putting in a 20% drop and etc., and this not be considered like a high, then it's harder to make that argument, right? So let's consider this to be a high compared to our previous one, and at that point there, I'm saying that you've got this this bearish divergence, right? That's what you've got. That's one of them there for us in the 24-hour time frame, and you can see over here between these 2 points on the RSI that it managed to actually get by without the bearish divergence between these two highs, just roughly speaking, and that's good. Okay, so that's good to see. I'll take away that red line to not distract you. But so when you look then across the time frames, then you get to build a picture together. Now, what you ultimately choose to do when you're doing your own analysis with regards to if you want to make trades based on some strategy that you've worked out in advance with regards to the 15-minute time frame or something along those lines, then you're making decisions off that. But it's good to know what the overall market is doing, the dynamics of the whole thing, and be able to pin a story together across different time frames. So that this is a speculative one at this point. We've not actually got across here. This isn't confirmed, and that's the part of the debate that I was having about this drop down. But that's that's what we're doing here in terms of looking across the time frames, and then you make your decision based on what you're going to make your decision based on. But then you can know that what you're looking at is the trend, and that's the trend is your friend, and that's of course the thing that the overall higher highs, higher lows underpinning the overall concept of trading has to do with things. So we're still pointing up towards the top side in terms of the no sure thing. Yes, we've had a cross in stochastics and we're coming back down the way in the 24-hour time frame, but it's not anything unusual, having not really put in much divergence in this area here anyway. The story with regards to the previous areas and the divergence is true across all of these oscillators. And then likewise in terms of the DMI, the strength is still there. Obviously then you'd be calling that just a sort of natural retrace regardless of whether or not it was manipulated. Then in terms of DMI, we came up towards the edge of the bullish control zone. This is then the way that I've kind of modified this to work with the background of that one. It's not exactly the same percentage zones that other folk use. You see we got to the edge of it and back down. On another person's chart that might look like we just got into the over bought territory, then backed away again, and it might be then more indicative of the overall divergence that we have between the two highs at that stage, and it's like worth not being blinded to that by the other concept of saying that, well, we've kind of come up towards the top of the bullish control zone and now we've gone down to the bottom of it. So long as we kind of continue this on the way, then we continue on the way, and this is just then a healthy enough bloodletting, if you like, before we go towards the top. And this has all been positive accumulation in a sense, in the benefit of everybody who got in at lower prices, etc., towards the top side. And that's the bigger picture here that we're looking at. So let's kind of resolve this out a little bit, this story here where we have the conflict in terms of the lack of divergence just here, and the divergence that we are seeing across the other time frames while we're still in a positive upward trend. And the reminder to everybody that, of course, that while the trend is your friend, then it's your friend, right? Okay, so you trust that friend, and then you'd be looking at the sort of the 236 here as your area for that. As a quick reminder, just hit the old button and have a quick looker. So here we're looking at sort of 52.5 grand, right? Call it that. But let's bring a bit of resolution to this by jumping up towards the 2-day time frame, taking the old divergence scope over and looking between these two highs and saying, well, look, it is a tad divergent, perhaps, class B, if you want to call it that, and we're looking between these two highs. Now we have got hidden bullish divergence on the go here, so if we continue on the way off the back of this hidden bullish divergence, then everyone will be like, oh, sneaky, that's how you knew that was going to happen, if you wanted to give them some sort of narrative. And if, of course, if we drop down here off the back of this divergence, then you'd be able to pin that together with what you're looking at on the other time frames as it kind of merges it together here in the RSIs. You can see for us, showing us the divergence that we got here. So divergence, what is it? It's just a warning sign, just shows you that the strength of the trend, which is going in one direction, is kind of flagging in the face of those highs. It's kind of like, we're all puffing up the balloon, and the balloon's getting bigger, sure it is, but everyone's going at that point, and then it would take somebody with bigger lungs. You have to pass the balloon off to daddy, if you like, and say, can you fill the rest of this up for us? And either he does and pushes the buy button, and of course everything goes well, or says no, just going to let this one kind of play out a little bit, and then you get that consolidation that we're looking at. And we're going to know that with those numbers that we've already discussed. There's your full deal technical analysis. Not going to do it as complicated as that for anything on the rest of the show here. That's a lot of education as well, but there'll be concepts that we cover from that section of the show later on here for us on the go yo. But just to put it all into perspective for you, the weekly still looking good. Lack of divergence over there. Down at the 12-hour, then of course, you know, that's fairly stark. Got those areas for us to be aware of. Okay, so this is going to just constitute a little episode that I run here at this particular moment in time. I'd like to say to everybody, hit that like button and stay tuned, of course, as well, because and what I'm going to be doing here is looking at a couple of different coins next. Going on to look at Ethereum next. How magical is that? And then but I'm just going to give a quick sort of summary section, and this is kind of handy for anybody who wants to bookmark the video or send this live video to a friend and say, tune in to watch this guy's to the analysis or whatever. You can take sort of rough timestamp from around about here, in which case I can do my thing. So Bitcoin prices have been going very, very, very high, then very, very low. We've seen BTC USD pair drop as low as 47,000. Haven't actually been trading at around about 58,000 per Bitcoin just earlier on, just a number of hours beforehand. That's of course massive price action, lots of volatility. Let's take a look then at where the prices need to go to keep going up, and what needs to happen if you want to see this thing going down, or at least consolidating for a little while here. My name's Rocky Outcrop. Thank you for So here's the charts, folks, and previously we had that rise up. It consolidated in a wedge here, then we broke up towards the top side, getting the full measured move, and then we've come in for this other wedge, which we actually had a full measured move off of as well, which is just here, and that allows me to just delete this now that we've kind of chatted about that. And the prices went even beyond that and retraced back down the way. In fact, if you look right in here, you can see that from the lows to the high, in terms of the departure point, when sort of, you know, then the rocket scientists pushed the button and it went towards the top side, and we went all the way up to Mars here. Then in terms of that launch there, that retracement point here comes in at 236, and we're above that. Okay, so that's good, and that's going to be the 236 retracement point here at 52,600 or so. It's going to be our area to say, let's close above that and things are rosy. And if they go on down below here, then what we're actually seeing is, in terms of the smaller term Fibonacci from the highs to the lows, that we've then actually gone down past the 618 golden pocket zone, and we're continuing on down the way. We could therefore be looking down towards this golden pocket over here, which lines up nicely with the macro move, low to high 236 Fibonacci retracement coming in at 43,000. Okay, that's a little bit complicated, sure, but in the live show I explained all of that and did it in a nice educational way as well, which is pretty groovy. So if you want to check that out, then absolutely do, and hit that like button. It really does help the channel a huge amount. But what I'm really getting at overall here is that it's good and positive to see the prices right now above the 53,700 area, where in fact are they at this minute? 54,100. Very positive indeed, but we can stay more or less positive on this until it goes down below sort of 52,500. Then things get a bit more sort of dicey, and of course then overall we could be looking at coming in and trying to touch off of some other area. If you're looking at sort of bigger term picture, like back down at towards the 50% Fibonacci retracement point, which we didn't actually manage to fully take out of the move towards the top side, which we're now above the 236 of, or we could be going on down towards the 618, and like I said, this blue line over here, which is really where we don't want to see the prices dropping below. And that's that. Yeah, cool. That's your technical analysis for right now. There are other things that you could be looking at. For instance, we've got divergence here on the DM, on all the oscillators down below, including the MACD just here. And that is that on this term time frame. Whatever, it's all good. Just check out the live video if you want details on it. It's really, really good. That'll do. Cool, nice one. So that was a little bit unorthodox for me, but there we go. That's pretty good anyway. It's all pretty good. They really should just watch the full thing if they want extra detail. Don't we agree? I think we probably agree. Good to see everybody out there, by the way. Jonathan Range, Craig Hicks, the Garden Prophet, K-Doc, that's Brandon in there with the Garden Prophet, Claren Mulholland, your DeFi guide, awesome channel, Rocky. Cool, thanks very much for that. I wonder if you've got a YouTube channel yourself there, and if you do, we can check it out later on in the show. Scottish, you're asking? Absolutely, that's correct. And K-Doc answering for me, of course, he's a fellow Scotsman himself. Kenny Flatten, good to see you here. I'm just waiting for Ethereum and Bitcoin to crash so I can finally afford that smart contract gas fee for uploading art. That's right. Talk about the days of, you know, all you guys just there 18 months ago releasing your NFTs and all that with paying pennies or you know, relatively at least anyway at this point looking back, for distributing your artwork and living it up with your digital lifestyle. Now you're getting a taste of that stricken artist in the attic, doing his art by candlelight, romantic thing. You can always look back, you can say, when people in the future say to you, yes, but you sold your pictures for half an Ethereum one day, and that's now worth 50 bajillion dollars, or 9 trillion space credits. You can say, yes, but think of the gas fees back then. I was truly living by candlelight. Awesome. Was born in Glasgow. Been following you for a while. Good to you. Thanks very much. Thanks very much, buddy. Good to have you here. And it's great to have another Glaswegian in the house. How about that? Nice Scottish welcome to you. That's water that I'm drinking, but we can imagine it was whiskey or something, right? So cool. Let's take a look at Ethereum versus USD, and this time round, I'm just going to run it the whole thing like one of those episodes, but we'll try and keep it a bit neater, shall we, in terms of its execution. Thanks so much for joining me, by the way, everybody. Hit that like button. Go and hit the like button. Go and do it. We're looking here at 18 likes. We've got 21 viewers or something like that. Give us a like there, folks. Don't hold back. Don't hold back. Hello. Ethereum prices have dropped somewhat in the last day, haven't they? They come all the way down towards this cloud. We'll be taking a look at that and where it's retraced back up to, and if we need to be worried for any further moves towards the downside. All that and more to follow in this Ethereum price prediction video. Thank you all so much for joining me. My name's Rocky Outcrop. Let's run these intro clips. Thank you so much. As you can see, I'm actually running a live stream right now. Be sure to join me for a live stream someday. It's interactive. You get to chat. It's good fun. All we're looking at here is this wedge. Now, of course, we celebrated several times in the past how the prices were continuing to go towards the top side in the face of some bearish signals. Okay, they were doing it in the face of them, and well done to them at the time. Then we saw price action then kind of suffer the consequences of that. Some people a little bit overextended, perhaps buying Thon dip over there without taking any of their profits. Wouldn't you say? Well, that seems like a likely whoops. That was the Bitcoin episode. There's also a Bitcoin episode for people. Quick shout out to quick plug for the Bitcoin episode. Back over here in Ethereum. Yeah, so what we're seeing here is that the Ethereum prices were in this wedge ultimately towards the top side. We talked about this in a couple of different ways and how a wedge can work in the run up to all of this, and as well we looked at it at different sort of layouts, such as looking at this area and saying, well, there's a channel here at the end, perhaps on this linear chart, etc., etc. Well, ultimately there was two ways that this could go, and what we'd hoped for was a continuation of the overall upward trend, and unfortunately that's not what happened. Now we have had a move outside of this zone, but is this a little bit premature, Rocky? I hear you saying, because if we just also carry the lower end down the way and connect the three lows, then as if by magic this almost then becomes like a bigger channel towards the top side. Now that's always going to be the case to a greater or lesser degree when it comes to doing technical analysis. There's obviously a subjective nature, and things have got a very much gestalt nature about them, where you see it one way and then as soon as you see it the other, well, it's hard to look at it any other way, you know. So we are asking that question, and you could just position this very much like this and say perhaps we're back within the wedge as well, and that everything's just, you know, ticking along nicely, plenty of contact points along the way. What are we going to do then to try and mitigate that for just now? We'll look at a couple of different things, one of which is the Ichimoku cloud there, the Ichu and Moku cloud. And this is of course the Ethereum USD technical analysis, not the itchy and scratchy show. But what we can do is say that, well, we came down towards the cloud here and touched off of this leading line. Well, isn't that interesting? And where did we go? Well, we didn't go as far as this lower line down below. Had we done so, that would have been a 50% retrace here on the Fibonacci, which wraps around these this entire wedge from its inception to perhaps its completion so far. But we're not actually there yet, and we're just actually only having dipped our toes into what could be arguably fake out territory. As you can see, the price has moved up here, putting in all these little areas along the way, but to say that these were actually necessarily the low in a larger term, broader viewpoint than that is kind of, you know, asking a bit much. Instead, you know, we've so far come in much higher than the previous low. So you're looking at the 50% point, remaining above that, essentially remaining above $1,290, $1,300 is good, and staying above 1455 is a lot better, which is quite a likely point for the prices to go to if we do see them breaking down below 1750. And we can see that the prices here are 1768 currently. They're at the edge of what is this conceivably could be this wedge, you know, where we're looking at the volume. There was a little bit of an increase in volume throughout this period, but it's not necessarily breakout volume. And if we were looking at this wedge, then the measured move is it's always kind of more or less the same, depending on because this point, obviously these two anchor points don't change when you change around so you get that with the whole trajectory thing. Anyhow, the breakout from this, if we're looking at this from that point of view currently, does take you down towards that 50% area. So that would be how you'd be looking at that one, say, in terms of the likelihood if we do push on past the 1750 zone, right? That's it. That's all you can really say about it. We have talked recently, I do believe as recently as the last live stream that I did, and then the little clips that I made from it about how we could be coming down towards the 1600 price. I did say that right? Pretty sure I was pretty clear on that one at the time, and that's cool because we didn't actually take out this 1582 area, which is the 382 in terms of any of our closures, and, you know, kind of cascade on down the way. However, of course, we could be looking at the start of something like that at the minute. This is the 12-hour time frame. Let's take a little comparison between some of these oscillators here on the 12-hour, looking at this and saying, well, so far the closure of this could actually come back in higher than the previous area over here, giving you the case to be made for this to be coming sort of bullishly divergent. Although there is also the clearer case to be made to say that that this is, you know, this hidden bullish divergence is just simply going to become bearish continuation should we see something like that, and there's plenty of room to be made towards the downside, and it isn't certainly a diminishing strength of momentum towards the downside so far. It's increasing so far, and that then boils down to looking again just at this area, you know, and you can cut this up into, you can julienne it into 1,000 little different strips if you like, or you can crunch it all whole. It really depends on what way you want to look at it in terms of just pattern, the idea of how these, you know, you can see as well that these lines on the Ichimoku cloud line up with these areas on the Fibonacci. It all kind of makes a degree of sense on this particular time frame. This is the 12-hour right now, so, you know, we're looking at this and saying, well, like, we could have broken out of this zone back up and down again here. We didn't actually manage to do that in the same way that we didn't really manage to break up the way in terms of the wedges that were just, you know, the overall large one that we had. Quick comparison therefore in terms of the 24-hour time frame. Well, that just takes a slight adjustment like that, and there's your upward things. We're still in that zone, you know, the beat goes on, etc. But let's just give attention to the 50% line on that one, and you can see that we've had a negative cross in here, right here. So this was obviously something that we spoke about at the time. The positive cross was you know, coming in and having a kiss and then just moving away again straight away. It hasn't happened. 24-hour time frame, you know, by, like, you know, you could play this with a negative bias if you like. It's there. It's a setup for you. It's a trade setup. It's got a decent enough risk to reward payout on it, so it's there. However, you know, tentatively thinking about how you would manage risk with regards to this, because taking out our previous highs over there means that the beat can just simply go on, and this would then of course have been just more of the same more of the same overall, really, and this would cross back over again until the strength of trend continues. So if this does crack down below those areas, then you've got a degree of that to go off of, and you could say, well, then, you know, okay, that was that. I'm not a financial advisor, none of this financial advice, of course. And the no sure thing, let's just bring up the no sure thing and show that, you know, that any of these sorts of tentative crosses here, they really need to be, they need to get followed through. It's not happened. We've not had it with the price actions, didn't get the follow through, continuing towards the top side, putting in highs, higher highs all the way along, never getting a satisfactory retrace, kind of bears out, you know, bears out, right? Fine, new phrase, it bears out. And in the end, after a while, in terms of your uptrends, you have to have something happen. Okay, so something had to give, and it did give. In terms of percentage drops down from the highs down to the lows, you're talking roughly 20 odd percent. Is that unheard of? No, it's not. Have we really done anything significant? No. Look out for volume coming in here. Confirmation from any of these indicators down below could be coming through alongside of it. Sanitize that slightly by showing you the weekly trend very much towards the top side via gold. Of course, a little bit of the old divergence here potential for us with the highs on the highs up here, but that gives you, like, you know, in terms of if you're trading that off the weekly, then no sweat, right? Okay, I suppose. And then in terms of the 4-hour time frame, you can see the significant areas for us here. It doesn't take, I think, like, everybody's got the sort of the pattern recognition to rapidly just draw in the levels, you know, like very, very clearly what we're looking at in terms of the trading range here. And then if you assign sort of generic probability event to these as being somewhat lower, and this somewhat, you know, higher, and then again this somewhat lower, and trade it between them, then you're not doing a bad thing. But, you know, be aware of the fact that, of course, this would turn into hidden bullish divergence with taking out that area towards the top side. So then, of course, you talk about risk management in that area. And of course, the other areas, right? Great, nice one, done on that one. Okay, so I went on a bit much there with regards to Ethereum. Didn't want to give out that much information, but there you go. So let's see if we can do a link one here. Narrow it down a wee bit for us. Okay, so there's a narrative. We'll go with the narrative. Whoops. Where's my top end of that? And yeah, great, cool, nice one. Thanks everybody for joining us in the live. Hit like if you haven't already. Nice to see you, Zoner, by the way. Nice to see you. So, right, cool. Now, here we go. I'm just going to run through this. I'm just going to run through this one fairly quick. The narrative over here, by the way, is going to be support turned resistance. You know, the tragic, the Romeo and Juliet of trading overall. And of course, here we are having the prices coming in, and the Ichimoku cloud says, doth thee bite thy thumb at me? Do you bite your thumb at me? Right, enough. Right, Romeo and Juliet for the win. Here we go. Did I see the scam Wix on Kraken today? Well, no, but it's Kraken, innit? I mean, this is Kraken. It's why people trade there, folks. Kraken, our USP, low liquidity. Check it out. And here we have it, folks. The Chainlink, Link USD, the charts, everything that you could want right here in the one place. Because what we're looking at is a story, a love story, a tragic love story of support and resistance. A story which was a wedge right between us and the prices as it broke up towards the top side. Actually, no, together, bringing us together, the prices, yes, to the moon. And taking out its measured move, coming in here for highs at $37, let's call it. And wasn't that wonderful? Everything was fantastic. But that honeymoon period then, of course, looked like it was going to break as the retests of this wedge did finally come between us and the prices, sending our hearts down here into the gloom as the Chainlink prices dropped all the way down to $24 and something, $25, let's call it, for the 24.87. There's it there. For the low of the day. Oh, what a love story. And at the minute, you know, we're kind of in marriage counseling on this one, right? Okay, what we've got is the prices have moved back into the Ichimoku cloud. Groovy. Okay, we have the potential here for for a degree of, no, I was going to say we have potential for hidden bullish divergence on the MACD there. We don't actually. Cheers, Andrew. Quality. Thanks very much. Little shout out to Andrew coming up here in a second for us. And so we're also looking between these 2 points and saying, well, we actually have come lower, so we can't really call that hidden bullish divergence. There we go. Thanks so much for that, Andrew. But looking back down the way, then you could choose some points in the past and say, well, hey, on the bigger time frame, this probably does look like a bit of that on the go or so. And on the RSI, let's bring up the RSI and say, well, yes, okay, so we have come lower than over here, and we didn't in the price action. So, you know, looking up the way, we can see that the bullishness in terms of the market is still there. It just needs to be exploited by those bulls that also, you know, to kind of set that run going, or else, you know, it doesn't, and that fades away, because this is not confirmed in terms of in terms of being actionable. It would need to be seen as having really set that in as a local low overall for us. But going back down the way towards the 4 hour time frame, where we see the tragic love story of ups and down price action playing out here, we are above the 236. That's fantastic to see. That's coming in at $30 as well, so lovely round number, making that easy for you to kind of, you know, get there stored in your short-term memory banks. But then looking back as well, we can see, if we're not looking back but looking over here, we can see that the $25 is where the 382 is. We did of course test that and found it happy to come in there and provide liquidity for us to go towards the back towards the top side. But looking at that, as you can see, really in the period here, when looking at in terms of how the orders all happened, it all happened within this 4 hour time frame. You know, the all happened within that 1 hour time frame, jumped down to 15 minutes. It all kind of happened within this 1 hour time frame, where we saw the prices push on down and then get bought back up kind of quickly. So this is one of those questions where you say, well, is this V-shaped recovery here on the 15-minute time frame going to be enough for me to then be kind of bullish on bigger time frames at all? I mean, is it reasonable to sort of conflate potential hidden bullish divergence on a daily time frame with 15-minute V-shaped recovery type pattern in around about a Fibonacci level, which is, you know, is that fair? And well, it's certainly a departure point in terms of looking at things, and where the prices could be going then next. Well, let's see how they form up around these areas. If we're looking at this and saying this needs to kind of go towards the top side, it probably is fair to wait on and to make sure that this is a real low and it has actually been significantly tested or not here. It doesn't necessarily look like it has necessarily been one for us so far. You also, if you're like waiting to try and get in there out of a position, you could wait to see how this resolves overall, because one way or the other with the movement of the prices, then this will then of course cross or not cross, and you know, then you would have your trade set up kind of coming together for you. It is only the 50-minute time frame, and this move here has already happened, and that would be how you would approach this from that point of view. Then moving of course then back out of this territory and saying, well, how are we looking? We could get a positive cross in terms of the 50-minute time frame. Over here in the 1 hour time frame, we have seen this turning around. That has gone now, started to move towards the downside in terms of its slope. Cool, okay, that's the DMI losing some of it after having come in here and checked off of 50, an area where it so often loves to come up and then just say cheerio to that particular stage of the movement. Okay, so this in this sense would be it kind of regaining its strength if it were to do so. Well, the stochastics point up the way just now, having, you know, tried to cross but not actually successfally done so. So that ties together with that kind of idea bleeding up the way again here. What do we have? Well, we don't have that potential at this particular time frame to really, you know, diagnose that as being hidden bullish divergence. That's not quite fair. We are above the 236 Fibonacci and we're back inside the cloud overall. I actually didn't really look at the cloud, it's just existed in the background, but that would help for in terms of like, well, where could your next move come in terms of finding resistance at, and we can talk about that as we move back down the way again here. in terms of this one. Going back up towards the 12-hour time frame, though, we can very much see that this is a very negative cross, while the actual ADX itself is in chop territory. So we're not going to put any trust into this one. It's not got the strength of trend in place to really say that, okay, look, we're doing something. But if we do, of course, crack down past key levels, namely $30, and then on beyond, then we'll think that we'll see the writing on the wall along the way. Probably, of course, then does this constitute that hidden bullish divergence? Well, you know, no. This is lower than that, and that's just the story for us. Okay, cool. So going back down the way again, then. Going back down the way, just kind of skipping the 24 hours in terms of that wrap up there. What we'll be looking at is saying, well, first off, you know, can we get past these price points up above us? Now, the 3-hour time frame is lining up there more or less with the wedge. The 2-hour time frame, we're seeing that the cloud is lined up with the top end of the wedge. You know, so that's in and around about the wedge for us is the information there, and that this crossed over the wedge, you know, just recently, and it's coming in at actually where the 236 is. So in terms of the near future, are we going to see this operate, and this is the story, as a low or not? So like, we need to see the resolution of whatever phase of price action comes after the initial recovery phase of what you could be looking at in terms of this 15-minute time frame as being a V-shaped recovery. Okay, so you could say that, but the wizened approach would be to say, well, how about, you know, we take a look at how this performs for us in terms of actually giving us a narrative in the run up to it, you know, and so we don't follow the breadcrumbs off the edge of a cliff, you know, that, you know, while everything looks good, we'll just continue to map it out as we go, right? And that's why we're looking at that price point first off, and so it depends on whether you're in a position or not, but obviously not financial advice. And if you want to talk about that sort of thing, then you can talk about it in the Discord, where we have the premium section, which is actually open and free for everybody. But if you want to contribute to that, you're going to have to do that through the Patreon, and we're looking for another 4 members this month and kind of get it up as high as 10 in the following month. Is that possible or not? And obviously I always take and act on feedback that's given, so if you're just joining along here today and you've not heard of any of these things before, well, that's you hearing about it now. And we have a free premium section currently, which is going to turn fully paid whenever, and of course Patreons are invited to help support the channel whenever. Cool, that'll do for that coin, right? That will do for that coin, I'm pretty sure. Profit taking target. Oh wait, we talked about, well, I didn't say the numbers, did I? 32.5 is where you're looking at in terms of the broad strokes of that wedge. Being able to take out this previous high here at 35 is going to be, you know, the first real step in the recovery. Well, I mean, you can look at it between 34 and 35 because you had this head and shoulders on this time frame just here, showing us that there was this potential for a drop off, and then when we broke past the neckline in at $34, you know, down towards the downside, then it just actually cascaded on past one point in the next, taking out the previous structure here. Now we have recaptured that, staying above it ties up with a 236. So this is what you're looking at in terms of your latest highs, and of course on beyond, les targets on beyond, s'il vous plaît. What you're looking at there is up towards like 47 is a reasonable upside target if we see a decent move off the back of this, where we take out all of the market structure and really, you know, set a reversal in against these sorts of negative aspects that we're seeing at times on the lower time frames. Okay, just checking with the chat there. Andrew Davison, RSR, please, gentlemen. Well, of course, you said RSR. RSR is coming up. You did indeed donate to the channel. That is the agreed upon rules of the show, so that's absolutely fine. Let me just get it here on a list. Now, are you talking RSR versus USD or RSR versus BTC? If you're talking RSR versus USD, then I'll just get that chart up right now and kind of draw out a couple of brief things here that we talked about recently. First, okay, so we're looking at the RSR chart on as part of the premium aspect of things, and saying, well, there was a couple of moves that could be had here. The top end of that move, if it was going for this pattern, would have been that the D point were around about 70, you know, 0.077 cents. there, up as high as perhaps $7.50. Now I do expect those two levels there could become important, or in and around about those areas, but we also spoke about how this pattern would fail, and the profit taken target, really, in terms of the 5-to-1 risk to reward, was up to everybody to kind of do themselves, but it came in for decent ones along the way. So what we're and then we retested this area, which was a clear sort of liquidity zone for us, where that red band is. Retested it again here and found it actually wanting in the end, and dropped on down the way and did the full retrace down to the A point, and in fact on beyond. So, like, you know, managing your risk as well, I suppose, had you still had a position here at the 50 area, or, you know, 5 cents before dropping on, you know, and then it ultimately dropped down to 3.7 cents, you know. So it speaks for itself there in terms of the need for risk management in it around a time when you could see 30% being wiped off the prices, you know, very, very, very quickly. So you know, that's what the danger was at these points. And in some of them, I suppose, in some senses, it was more clear than others in terms of what distinct failure points you might have along the way. Now, retrospectively, looking back at this one, you can see that I having drawn on a pattern, it at least gave some idea, regardless of whether or not it was a beautiful pattern or not, as to a couple of failure points, you know, of distinct note in the market. Now, let me just remove that real quick, and without it on there, it's not as easy perhaps to see, but it is fairly significant and obvious that what you're talking about here at this stage is this significant low here, this following on significant low, and you can do the whole process in a number of different ways at the same time. So I always talk about this on the channel, not only the gestalt nature of things, but the sort of the interoperability of different methodologies when it comes to technical analysis. So here's pattern trading on top of like harmonics, and just talking about the structure within this zone and saying that overall it formed what is really quite nice in terms of the angles of it. The this triangle shape here, right? Okay, this is would be called an ascending triangle, and then we've broken down. Now, did we do enough in terms of coming down towards the second overall zone here, which is from previous moves? We talked about this last month and whatnot. Has it done enough, you know, or whatever? So I'll just get rid of that Fibonacci there and go up to a higher time frame. Draw it in here. What were you saying there? USD, my man. Excellent, good stuff. That's where we are. That's what we're looking at. So price action say. What does price action say, Rocky? Price action say that sometimes the Ichimoku Cloud says a lot, just, you know, without necessarily even having understood, you know, what these different components are. Now, this cloud area is drawn out into the future. Okay, now does that necessarily mean it's going to predict the future? Well, we like to say it does. Okay, but but you'll also hear me saying on the channel all the time that charts are not inherently predictive. You cannot actually predict the future, and that, you know, magic doesn't really exist. I'm sorry, right? Some magic does, like love, okay, and seeds that need to freeze in the winter to thaw out in the summer, or like plants that need to be like the phoenix, you know, like the phoenix, right? Whew, there's a good one, like the phoenix. Now that exists. Right. Anyway, chat over. What we can see here is that this stuff that was predicting the future, then it's determined, as these points are here, by the price action that we're experiencing now. Okay, so during this period of time when we were consolidating in this downward wedge, and then afterwards when we came back down to retest the breakout zone, before then going on to actually, you know, getting the full move and then some off the back of all of that zone. I mean, I suppose you could have drawn it out wider and gone for a bigger one, whatever. Then we formed this wedge during that period of what was ultimately just overall consolidation in this general area here, as defined by these big wide this sort of channel here, right? Okay, so so you know, and then when we broke outside of it again, the overlap with regards to to trade in. When we broke outside of it, when you break outside of a channel, there isn't really a measured move that you can do. Really, I mean, whatever. It tells you about the trend direction. Ultimately, what we've seen happen then is we've come back down to retest the general area from this period of time, where you could say that we had really established this as with a good degree of support and resistance. And that is also visible in a number of other ways, such as looking at the VPVR, where you can see that if you take all of the price action over here and you chart it out in terms of saying, well, where was the most and least of it, how much was actually bought and sold using these volumes and that sort of stuff to come up with this chart here to show you where most of the trading happened, well, that's where it came down and tested that. And that's ultimately where the liquidity was on this one, in terms of people being, rather sensible in terms of managing their risk. Okay, so it does take an awfully lot of patience to be able to wait from a move that goes from those highs down to these sorts of lows. But when you see the price moving back up above 0.045, then you've got a decent signal at this point that you're on for a decent enough retrace up the way. And so far we've actually seen that dropping away down from the 24-hour to the 1-hour time frame, just to show the movement back up from the low that we had here. And you can see that we moved from the 38 area up towards the 50 area fairly quickly, and that 45 up to 50, or 4.5 up to 5 is more than 10% move, and that's quite decent to have. So you can take nice moves against that trend there, against that downward move. Of course you can, very good. But now we're at this point here where you have to then sort of reflect yet again, right? Because what we have is the love story of support and resistance here. Once again, what we've done is we broke out the outside of the triangle here. Then we turned around and saw that she was breathing after all, right? Breathing after all, and we drank the poison. Oh my god, we actually drank the poison over here. Okay, and as the prices drop down, we look around and we see, oh my goodness, she's breathing, and I thought that she was dead, right? Then it comes back up. And what's going to happen, are we going to be resuscitated and live happily ever after, which would be lovely, right? Like, really would be, or are we going to have to, with our final sort of breaths here, see Juliet stab herself to death in front of us, right? Or that's how it goes down, right? So what's it going to be? And that's where we are right now. Okay, so the managed risk into this zone actually is fairly easy in that sense. If you kind of think about your trading, instead of it being like a beloved position which is going to last forever and it's going to bring it's going to feed your babies. Instead, think about it like, oh gosh, what's the outcome going to be from this dire situation with regards to having swallowed the poison over here and then found out that our lover is actually still breathing? Let's hang back a little bit and not try and make any catastrophic decisions right now. And that's kind of what that says to us. That's all it really is. We've moved up past the lack of liquidity zone. We're back in it where it's bunched up again. If we see the prices then continue to go towards the top side, very good. That would be congruent with the Fibonacci retracement point over here at 45 having been taken out, and indeed the 382 Fibonacci having been taken out at 49. And then the next targets towards the top side, without being particularly aggressive with your trading, simply come in here at 54, and that takes you up towards a target, that's the top end of this wedge that we've now drawn in again, having like broken back into it again. And then you've got the 618 over here at 59 to 60 would be a great area to then be looking at as the potential for you to be taking some profit in around about those zones. Okay, and what makes me say that as being a possibility is the fact that we have to acknowledge where the bodies here of this actually closed overall. And in terms of the overall downward movements that we've had, this is the 1 hour time frame, so I can hide the Ichimoku cloud so you've not got so much noise on your screen for you. This is the 1 hour time frame, so looking at this one and saying, hey, the bodies came down here but they closed here, so this was kind of a bit of flux. But of course we're not looking at the 24-hour time frame where you might have had bigger wicks. This is still a low enough time frame, very low one, for this to move up in the last, if it had needed to move up 10% just to not, you know, etc, etc. So we're okay with drawing a pattern in it around about this zone over here, okay, and using those bodies as our area for us, and finding this it links up over here, and it touches with this little area where we did have a measured move at before, when we considered whether or not this was a head and shoulders, which is then, you know, also could have potentially just been looked at as being the top end of this wedge, which potentially we could still be inside. So you're looking over at this zone here and saying that this is obviously then significant, and it has a touch off of this thing here, and that's 3 for us. That's okay, so we're still within this. So we, you know, this is the red line. Crossing it's very good for us, and staying below it's very bad, just generally speaking. And that the target towards the top side could be anywhere, you know, could be anything. But how about you take it from a sort of risk to reward point of view with whatever you find yourself doing with trading overall, and say along these sorts of lines, for instance, as an example only, for educational purposes. This isn't a suggested trade setup that I'm giving out here or anything like that. But you can imagine managing it around about that sort of an idea, whereby your target really is just the top end of that zone. This would be where you're managing your risk and saying, like, I'm not willing to stay in that particular trade if you're looking to trade it from right here, right now type of idea. You know, which is not recommended. I mean, let's face it. When you open up your trading platform, or when a particular YouTuber happens to go live that you follow, etc., isn't the moment to trade. Not on the, you know, so just always remember that. So if you happen to start your trading day at 9 a.m, for example, that, because you start at 9 a.m, and conceivably a lot of other people around the world also would, it doesn't make it the time to take the trade. And there's always time for TA, even if you sit there and you go, wow, and watch it go against you. As currently we watch this struggle here in the throes of its poison fit, asking, are we going to break up past that potential ascending triangle, or indeed was it too late? And was it Shakespeare calls it when he the, you know, written in the stars? Was it always the whole time? Was it whatever? So this is the current situation in a really volatile market. What's the only thing you can say about that is that to manage your risk accordingly. Of course, there'll be opportunities to get into these sorts of retracements, but what can you say about them? Because they're very, very dangerous overall in terms of how you should be managing yourself in the markets. And of course, you know, you can't predict exactly when they'd happen. Getting in here and trying to take a managing your risk off of a move that retrace down towards this area is just simply to go long as well. You have to admit that it's hard to conceptualize that when you're looking at what could potentially be the best short that you'd have taken all year, just to get down to where you'd open up your trade at, you know. So like it's very hard for people to conceptualize that type of thing, but we can as well. We can as well do that sort of thing if you want to do that sort of thing. It's not what people in YouTube land really want overall. You know, it's not really what they want overall. Oops. But it is possible. It's funny to see that it came at the 618. I mean, it's not funny, but it's obvious. If it moves now down past the 50%, which is where it is currently, then of course you could be looking down towards that area. That'd be your first profit taking target. It's just outside the wedge again. In terms of this time frame, that's the 24-hour time frame. So, you know, the chances of us going back down and getting a better entry from where it is right this very second are, you know, not inconceivable at all. Anyway, right, I need to do a sort of quick summary on this one. For the folks at home, you know how it is, for all the folks at home, interested in this guy. Hi, oh, quick, I need to stick on the old time thingy. Hi friends, RSR, Reserve Rights Token. It has had a volatile past recently, hasn't it? And we've seen the prices drop down as far as actually 3.7 cents on this one, touching off the Ichimoku cloud and then retracing back towards the top side. Are we going to see perhaps some more explosive moves in the near future? Well, I would probably say that if the past is any indication of the future, that we quite well could one of those perhaps though explode us towards the top side. What will we be looking out for to see if that happens? Thank you so much for joining me. My name's Rocky Outcrop. Be sure to hit that like and subscribe button. Come back and watch a live video sometime as well. And of course, for everybody that's tuned in right now, this is the live video, so great, and here we are. Welcome to the charts. And we've got this wedge going towards the downside. You could say this has a statistic. You might be able to say this has a statistical likelihood of bearing out towards the top side. Don't want to be confusing people with the word bearing, just saying that it could be perhaps moving towards the top side in terms of the resolution of this thing. Now, the current measured move off of this really only takes you back as high as the previous highs, and it has got, of course, the potential then at that point to come in and set some other in a double top or some other point of inflection in the market. Could be wise if you were looking up towards these zones to think about other areas in between. Plenty of lucrative targets away from where we are just now. For instance, a move up past the 618 golden pocket retracement zone on the Fibonacci, which is on the screen currently, headed towards that 6.7 cents area. That Fibonacci golden pocket is in around about the 59 to 61 area, 0.0059, 5.9 cents to 6.1 cents. Is that right? Yeah, okay, great. And other targets around those zones. In fact, it's probably worth really taking a note of this 54 target, 5.4 cents, where we could be looking if the prices were to get a nice rise up towards the top end of this wedge without really struggling to actually break out of a downward consolidation or trending phase in the market just now. It would be nice to see this operate with a keeping its price action above this red liquidity zone that we've got drawn in over here. Not liking seeing moves down past 49. They do sometimes lead to moves like this one we saw down to 38, so worth bearing that in mind in terms of your risk management. We're here again now, just gives you that easy way of re-entering the market if that was your desire. Now, of course, we can look at this a million different ways right up until the cows are well and truly home, but you could be looking at this 15-minute time frame and seeing the V type shape, the tweezer type bottom here on this chart, especially if you zoom it right out like this, right? Then it looks even more like, woof, look at that recovery, you know, look at the size of those candles, whoosh, right towards the top side. And that is possibly the case. Okay, it is possibly the case. We have come back in towards this target area. We are looking at the 50-minute and saying that we're pushing past the cloud on the Ichimoku. Coming up here, we've already crossed positively in terms of the conversion of the baseline. Could we crack on past that? And we absolutely could. So we're obviously in a target where a target area where something like this does become realistic in terms of your overall move right now. Now, of course, breaking down past these zones, it's not particularly difficult to manage your risk. I invite you to go ahead and do that. How about it? And join me for a live show sometime as well, where you would have caught a bunch more of this technical analysis along the way. Right. Nice. Oh, like and subscribe as well. That's a great tip. Hot tip. Like and subscribe. Hey, John. Not looked at Cardano, no. Not yet. Andrew Davidson, Rocky, you're a boss man. Thanks so much for that. Money well spent. Haha. By the way, Grow to Love from Discord invited me in the other day. Thanks for having us. Yes, and he is a great guy. I hope that you have, if you haven't watched this whole episode, by the way, then you might enjoy some of the content from earlier on as well, even if you aren't trading those coins, right? Because I explain quite a bit. It doesn't take a long time to watch, and there's a lot of educational stuff in there. Okay, I just do that from time to time, or indeed if you've been watching along pretty much throughout the whole episode, really. But it's good stuff. I recommend. It's not financial advice. It is YouTube advice. YouTube advice is hit like. Going to just take a quick look at the Tezos now. The reason I'm looking at Tezos right now as well, because that is where we were before Andrew intervened, tipping me and asking me to take a look at Tezos, not Tezos, RSR, Reserve Rights Token. Here we have Tezos. What do we want to look at it on, though? This is something I need to decide. This is, as random parallel channels pop up in the background. They're not. It's not. This is not the channel you're looking for. Actually, no. If you're tuning in for technical analysis, this is the channel you're looking for. If you're flicking through your Tezos charts, having random parallel channels pop up in the background, then it's maybe not. Where's it gone? Where's it gone? Where's it gone? I want it now. Right, okay, so everybody who watches this channel know that I used to have stuff on there which is no longer there. That's all good. Forget about it. Forget about it. Forget about it. And let's jump off the 30-minute time frame and kind of draw something out here for folk. For the folk at home, you know how it is. For the folk at home, everybody smash the like button for the folk at home. Send a message back to everybody at home, letting us know just how much they like everything. Right. Okay, cool. So similar story. I mean, really, you know, we talked about this already, this type of concept of having moved outside of the wedge, back down, retesting, yada yada. And where we've come from since, and we're past the 236 and here at $4. This movement down to 359, of course, scary. I get it, totally scary, and that's not ideal. But what it comes in at is as a test of this market structure. I mean, the 24-hour time frame there, we're looking at this as a 2-day time frame, for instance. Even easier to see that the last low is really down at this yellow serrated line. So we're doing okay on that front. And as well, in terms of the bigger term time frames, the cloud is, you know, in terms of where we had lots of previous price action, if you like, looking at the VPVR as a simple way of kind of translating this out again, is that you know, we're above those zones. We're in what still remains heady heights of positivity, as long as we really remain above the $3.33 area, for instance, all the threes. Really, that's what we're looking to. Don't need that parallel channel on there. That's what we're looking to, but what we want to see ideally is for this to turn around and go towards the top side. We don't want to see this trending down the way, especially not on something like the 3-day or the weekly. As you can see, last couple of weeks not been so zippity-doo-dah in terms of upside action. Sure, we came in there at $5.65 as the high on this chart, and since then we've come back down to test off the baseline. So when we did the Fibonacci retracement earlier on, we talked about how the prices can come down to 50% lines to test them. And where is this last area lining up with off the back of that? It's 26 periods ago, so 26 weeks. And you're so that's where it is. So okay, so that's where that's drawn in from. Essentially, the baseline on the Ichimoku cloud there, which is a purple line, which I actually anticipate is not really visible at all at home. Let me just brighten that up a lot. Leave it purple. Get thicker. Is right in here at, that's the 382. I was measuring it wrong. Where is it from? Where's the 50% at? Is it just back then? It was 26 weeks ago. Confused myself here. Forget that point of technical. Right. Okay. Scrap that. Confused myself. Whatever. Moving on. So from a Fibonacci point of view here on the weekly time frame on Tezos, everything glorious really. When you look at the last low down there at 157 up to the high and where the 236 comes in at, and this is the same overall 236 Fibonacci retracement point that we've had our eye on over the last couple of weeks, obviously, since it's drawn into that high, and the bodies are complying with it so far. Now, it's not a fantastic story where everybody's been going to the moon. It is a story where the need to stay above zones have been respected, but it's not. We've not got positivity coming in yet to say this is looking super fantastic right? Okay, we don't. Let's just say, you know, overall we got a high in here. It was a slightly higher high in the RSI compared to our previous one, so very good. So the positive trend, very, very, very good. We're overall to keep this. This is the weekly time frame. The high in here back then in this February 2020 to the high in here in the 10th of August to the high then we've just experienced here in February, okay, 2021. So we have this upward trend. That's very, very good. Now, we don't want that to be what we're going along. We don't want it to be just this here and it going back down the way. That's not what we want. So instead, what we're hoping for, right, okay, is to, rather than coming down to then confirming with, you know, another higher low along these lines here, back down to where we had our, you know, where we've got the 618 Fibonacci retracement point at, incidentally, you know, not going down as far as that and, for instance, testing the lower line of the cloud, of the Ichimoku cloud here, as it where it happens to be, incidentally, at that time. It's not, we don't want to see that happen, but we can acknowledge that that can happen, and for it to stay in what is a macro bullish posturing. Okay, that's what we're looking at. Beyond there, things get rather crappy. Okay, and personally, and I guess a lot of people would probably be looking towards all the twos if you wanted to push it, right? Okay, so that's the downside covered. But then, if you don't want it to be towards the downside, no, I don't want it. I don't want it. I don't want the downside. Don't want that. So we're above the 236. It's good, right? We're above the 236. It's good. I don't want the downside. Then some hidden Fibonacci there. I've hidden all the numbers on. Then what can we look to? Okay, so it's a weekly time frame, not fantastic in terms of this area, but maybe there's something in here which is you know, a consolidating type affair. And back down on the 3-day time frame, then what we can look to kind of becomes the story again. And that is, of course, this wedge having been retested since it broke out towards the top side, having put in highs, come in here and conceivably have tested off the inflection point that we had in the past of our previous lows at around about the 360 area, tested off the baseline here of the Ichimoku cloud on the 3-day time frame, and then managed to find a recovery towards the top side in terms of this wick that we've had today so far, without having taken out the moving average on the RSI. So overall, still looking okay. Potentially for this to then operate as some sort of bull flag, with a trend going down the way, but also you know, in terms of this being like a channel where people talk about bull flags. So you can go ahead and look those things up where you've got this type of structure following on from a rise. But also with this, if we get a nice body closure here, it kind of is sucking in your tummy, if you like, and looking good in uniform and saying, hey, look, right, we're still, you know, it was a close call thing there, but we got all shined up and polished and we made it out to parade looking good, right? Still, okay, just within tolerance. We need to see the prices go towards the top side. And when I talk about needing to see the prices go towards the top side, I'm actually talking about kind of really needing to see 20 to 30% plus moves in this one. So it actually does operate in a sense as a potential for at least a decent trade, which doesn't even need to take out the previous highs and actually go on and do that, what, you know, to continue on and break past that structure in the weekly. Bearing in mind, though, that if it did, and it did push past the previous highs, and it pushed on significantly past them, it would be breaking a macro weekly structure. And then you're talking about the sort of the $5 to $10 to $20 type moves that you've seen in other cryptos at that stage, right? Okay, but that would be then, and this is now, okay? And if you're looking for other ways that you can make money, then one idea is to join the Discord, where we have plenty of advice in there for folk with regards to, you know, picking up free coins that Coinbase distribute. You know, you could pick up a tenner here and a $5 there. Okay, cool, nice one. Not to be sniffed at necessarily, and definitely a nice introduction to people who are new to crypto. And it's decent enough to, you watch their videos and they teach you something and you get something out of it in return. All fantastic, not too dissimilar to what you have on the go here. Yay, shout out me. So then, but you can also look in there for other things as well, like the section which is the premium section, which is free currently. Great, cool. Link to the Discord down below. Join it, take advantage of that while it's going, and of course do consider joining onto the $50 plus level on Patreon to keep that thing going past the point where it's no longer free. And then take a look in there and talk to me about if you would like to be involved in a cryptocurrency for which the funding round of initial investment could be happening this week if everything goes well. Now, not all advancements in this cryptocurrency would move as quickly as these ones. We'd hope to have things move along quickly, of course, but everything needs to happen along a critical path. And the first step in that is naturally, of course, that sort of funding round for moving on. So anyway, how can we explain all of what we've just talked about there for the folks at home, for all the folks at home who haven't made it along to today's live stream? How can we explain that to them? Well, it's 4:20 just now. Let's just drop a wee stream marker. Hi friends, Rocky Outcrop here with more Tezos technical analysis, taking a look at that XTZ USDT pairing that we all know and love so much. We've seen the prices drop down towards that $3.60 area, which is actually not a terrible thing to have happened. Whoa, shoot me for saying that later. We could be looking up towards targets which are as high as 20 to 30% above the current prices. How about we run those intros then and take a look at the charts together? Folks, nice to see people joining me in the live stream as well. By the way, reminder that this video is filmed during a live stream, so if you want to join those live stream and get to chat and everything else, just hit that like and subscribe button. It's great, interactive, it's good stuff. And yeah, here we go. So what we have up here in the background is the 2-day Tezos chart. We saw a big drop down in the prices recently. How about we have a little sort of breather for a second and say, is it possible that we're looking at some sort of bull flag or some sort of consolidation affair going on here? Perhaps this wedge that we've got on the go, and could we break out of this and come up and try and challenge our previous highs? And if we were to do something, what would it look like if that were to happen? Could it be even along these sorts of lines here where we put in yet another higher high? If we did something like that, you could be looking up towards the weekly time frame and saying, yeah, we're breaking out of this weekly this weekly trending channel, the positive one towards the top side, as you can see there in the charts, breaking past there. Then you're talking all those those halcyon days of Chainlink and the $5 to $10 to $20 type moves, that type of thing. Wouldn't that be glorious? Or will we retrace down the way? Now, we don't want to come down towards the lows. If we did, just so we know in advance, you could be looking back down at that number. No surprise to anybody who's watched this channel before, at all the twos, 2 to 2 2 to 2 2 2. If you want to then take out these highs, move on up the way, then we need to take out 580. But between here and there's a million miles in terms of trading, dropping down all the way from the weekly to the 4-hour time frame, hitting the auto button and showing you this wedge again and saying, look, right, realistically, if we wanted to take a measuring stick out here and say from the bottom end of that wedge to the top end, you're talking about a 15% move, plenty of good trading to be had here. That doesn't even need to break the structure of what we're looking at. Plenty of inflection points or sandwich stops where you get to pull over and tuck into a nice tasty packed lunch along your journey without having to really invest everything all the time in all the move without ever taking any profits, which is not necessarily going to be a strategy for everybody out there in the markets. Looking at this then and saying, if we do actually push past this zone and start to take out these measured moves and go up towards the top side, yes, there's more potential for all those moon stories out there, big ways away, and a lot of trading to be had in between. If we push on down the way and actually go past the area of all the consolidation points in here on the VPVR, as you can see showing up for us, going down past these points of this measured move, then you're talking about a very, very, very different story, and you could be looking down to 222, but in the meantime you could look down to 280. Don't like saying that very much, doesn't sit very well with me, especially when you have to look past the point of this $3.34 price point over here, which we wouldn't want to see the prices nipping past if, of course, we could avoid it. And we can say that with a degree of certainty as we look over here and see that we've just taken out the 236 at $4.18. We're at $4.20 now. So let's hope Tezos takes a 420 break from its moves towards the downside, hey, and moves up the way a wee bit. But if it doesn't, then of course, you know, the 50% Fibonacci retracement point here is where we would see that measured move coming in at, and that's at $3 or so, or indeed perhaps pushing on down towards the golden pocket over here. Like we spoke about at 250. Okay, but that's all the different targets you need to be aware of for just now. We do have other ones towards the top side. Like I said there, it's all you need to be aware of for just now. But if we were to go up to the 1618, for instance, after this lovely retrace, if it was one of those healthy retraces and formed a bull flag and looked towards movements actually not only encapsulating this high and low over here and towards top side, but broke past the 100%, you'd be looking up as high as 630, 680, 750 on your Tezos. And you can imagine how much more excited the world would be having seen the prices go up by 50% from where they are now, if that were to happen. And then things of course get very, very tasty. And to think that it would be possible to come in for a 4414 as we saw on Chainlink, would that be possible? Well, it would be, and you'd be talking $25.73. So if you like the sound of any of that and you tuned into a Tezos video, then why not drop the like button for me on here? That would be fantastic. But a quick recap, okay, just so you know, for the here and now, we really are looking for the 236 at $4 to be maintained, $4.03 if you will. Otherwise, we could be looking down the way, and we then need to see the 350 area be maintained. If not, then of course, then you're looking at the next door areas down the way. But beyond that, it's not so great. On towards the top side though, saying everything goes well, if we were to get a move from where we are now, the next target up is actually 15% up at 475, and you don't need to get too carried away here. That still actually is just a lower high if you take everything off the charts and just acknowledge what the structure is right now. Short term downward trend. Okay, thanks so much. And there we have it, folks and gentle ladies. If we all want to look at any coins or anything, then I think I'm going to just call time up on that one, to be probably honest with you. To be honest, probably with you about that one, and take a look at perhaps Cardano, because it was suggested earlier on in the chat. We could do that one perhaps, and then say churro to everybody. Okay, so if you're looking to get me, Rocky got a pack probably sitting on at least $1,000 in moments off the $14 pack lot. When was that? Was that last night? Don't tell me that was last night, man. They are Flow as used blockchain, but it's an NFT project called Nutbop Shot. Has that happened? Was that last night? Was it? Tell me that wasn't last night, buddy. Can I get in on it? It's probably happened already. The childish FOMO that exists with the old NBA Top Shot. NBA Top Shot, yay. Yeah, so there's open pack, featured packs, featured packs, sold out, she said it's sold out. No, the one you own already. Oh, the one that I'm already. Yeah. Oh, sorry. FOMO, isn't it funny to see that? A little bit the old FOMO, because I was like, it's sold out. Yes, as Navanethan reminds me, the one I was FOMOing into is the one I already own. Oops, lol. It's like finding some money in your pocket, right? Thanks. Yeah, cool. Awesome. No new drops yet, mate. Just the ones you own. Check the price. Check El Precio, Amigio, Isezio. Can I see? Do I collections, right? Collections. Check out my collections, folks. I have John Wall here. It's 483 of 10,000. Let's give it a wee click here. What? And he got it. That's the athleticism. The athleticism, you need to do that. Jeez, oh, tell you what. He'd probably beat me at a game of basketball. Anyway, I've got that, and it is fat. Wait, oh my god, the prices, just let me check the prices. Oh, it's okay. It's okay, guys. It's okay. Whew, you can chill out. Put your elasto bands on for just now. Peep the wall. I pepped the wall. Lol, that reminds me of a car mobile game I used to play. I think it was called Top Drives. Yeah. Now click 227 available for sale. Oh, wait. Okay. Whoops. Bring this back up again. Now click 227 available for sale. 227 available for sale by collectors. Okay, lowest price $989. Oh, not bad. Select a serial number. Their serial numbers are number 2's there. So where's mine at then in terms of this list? Mine's somewhere between 12 and 10. Is that for reals? I could sell mine. What number did we say I had? I have a number of these. One number. What did we say it was? Like, I'll just go back. Probably on that page. Oh, I have 483 there. There we go. 483. So 483. Somewhere between 10 and 12. Call it 11. It's probably the mentality that's going on there. Is that even real? No, that's selling it for 1,000. I know they're just being cheeky bugger. They're just playing silly, right? They're just playing silly there because this guy here's charging less for a higher up one. But then again, I suppose then they would sell off eventually, and you'd be left with yeah, I get it. Doobie doo. So I see what you mean. Like, that's why you put on it. You could sell it for like $900 or something like that. That is mental. That is mental. Okay, brilliant, nice one. Well, we all want to be getting in on that, don't we? Next time around. Right, yeah, so did I do it? I did, didn't I? I did it good enough. I did it more than good enough, I'm sure. It's cool. And we were going to take a look at Cardano. Oh, look at that recovery after it's moved down the way. Has that got hidden bullish divergence then as well? It has got it. So that's one of the more healthy looking ones. Of course, the strength of trend is negative. It's in place there. This is the 4-hour time frame. We need to see this taking out its previous highs. Oh, let's just do this real quick. Hi friends, let's take a look at Cardano, ADA, as it's known to his friends. The coin of science. Nah, fuck it. That's just stupid, isn't it? That's a pretty good one, says TracePoint. Yeah, it is a pretty good one, man. Oh, you can scroll down to see recent sales as well. Let's do that. Recent sales, collectibles, highlights, John Wall, recent sales. Yeah, this guy sold his one. Oh, well, he had serial number 1 for 7.5 G's. This guy sold serial number 10,000 because he got the 10,000. I guess. Okay. I guess it's kind of cool. Okay, number 14. Yeah, cool for 1.4. Yeah, that makes sense. 1.4. Yeah. That's what I just sold it for. The 1.414 price point on that one. Absolutely. So $985 for serial number 8,834. What? No, he's not even shirt number 8,884. His shirt number isn't even 8,834. His shirt number is 1. God, he doesn't even weigh 8,884 pounds. Stream Maka. If you are just joining me, folks, then this is the Rocky Outcrop Show. And I'm about to do a static video for everybody. Hi friends, what we're doing here is... What are we doing here? Cardano, that's right. Hi friends, Cardano technical analysis coming right at you. Hope you're doing very well. The Cardano price has actually been doing very well, better than its compadres out there in the market. As we look at the ADA USDT pairing here and see that it recovered from this downward tromp in the prices, coming all the way down towards the second lead line of the Ichimoku cloud on the 4-hour time frame before recovering back up the way. And we're looking at the chart here and saying, well, if we can take out some of these previous highs, we're doing some serious various things here with this coin, having perhaps then confirmed this hidden bullish divergence and being able to then rise towards the top. Is this what it looks like when a coin tries to take up higher spots on that coin market cap list? Maybe this has got a similar odor to it. If we look down here, down below, we can see that while the story is of course one of hidden bullish divergence on the RSI, it isn't actually there on the MACD, giving you that little bit less confidence. Well, actually, I suppose if I'm all honest with you about it, then it is there on the MACD versus this low, but really the last low is over here. Yeah, let's kind of revise our opinion here on this one and say that despite the first part of this video being very, very good, and all those people then that tune out in, you know, the first 20% of a video, etc., well, they've got one story. Here's another narrative for you. If you look at that last actual low over here, then you can see that it's not really hidden bullish divergence at all. But you could make that point if you wanted to, and we've done well in terms of not having, you know, really broken any market structure overall here. In terms of where they saw the prices going down to, yes, it wasn't very good at all, and it went down and hit the golden pocket there of the last low, actual last low, up to the last high there, which you'd be making these comparison points between. Okay, so that's where we were, and we then recovered ever since. So have we done enough then in terms of the recovery, to say that we've, you know, got an invalid Fibonacci in our hands? Well, we do, so long as we stay above $1.05. Wow, the prices actually were as low down there as 82, so you can see that the 20% retrace that we've had a lot of times along the way with Cardano is giving up that buy again for folk. Last time we saw a 20% retrace as well was over here, you know, just on Valentine's Day, sort of the post-love honeymoon period wearing off on the 15th of February, and then cracking down the way thereafter. Same story overall here. Wouldn't it be nice then, therefore, to see the same story playing out towards the top side? And what does that story sound like? Well, it actually sounds like coming in for a 1618 Fibonacci retracement, as we can see by doing that over there with the last high and low in this trend. So if we were to do the same thing again, then where the prices could be going to are, for instance, the $1.50 area as a target. Now you've also got 139, 132, and that sort of thing, 120 where we had our last highs as significant targets for you. But if that's the first time you're hearing that, then tell your mama and your papa that you heard it here first, and, you know, set your hair on fire and run around like crazy, because we have to admit the prices are indeed only $1.09, and you're talking about a ridiculous move towards the top side. So is there maybe any point in throwing out any caution at all with regards to that? Probably. Let's just do that real quick by saying, for instance, if we do see the prices dropping down past that $1.05 area, in fact taking out $1.03 or so as we're seeing over here, then you're looking at activating this 236, right? So you're getting 2 for 1 on the old 236s there on that front, giving you a target perhaps if you wanted to get a golden pocket retrace all over again some, then down here, and that lines up perfectly with where we had our last previous high. Now this is an old Fibonacci retracement that I really ought to move up towards the top side now, but it's vestigial nature, whilst obviously now obsolete, having withdrawn all relevancy from that for this current point in the discussion that we're having. It shows us that this was the last area of significant support, therefore enabling us to move that on up the way towards the high, and pointing out that the 236 on that one is just above that 618. So if you're looking here between the 93 down to 90 cent area and saying I'm happy enough to see opens and closures on that at a daily basis and still maintain notions of getting towards that 150 target without perhaps having had to experience more pain to your overall account balance, then I don't know what to tell you. Right? Because that'll be a bit of a tough one to sell to yourself afterwards. Looking back, you would look back and you would say, why did I do that? And that would be a tough one to answer, right? However, in the run up to that point, then you would be able to make that negotiation with yourself pay off. Personally, I'm looking for this to take out the $1.09 area with a degree of gusto and make it so that this can continue to stretch towards the top side, put a little bit distance between us and our stinky past, okay? And then maybe perhaps take out those other highs. Failure to do so then changes the kind of the overall structure of what we're looking at there, and makes us question what we're doing, getting wildly bullish on something which with its most recent highs has had bearish divergence really screaming at us on the charts overall. While we experience massive 20% drop downs in price, then perhaps as well, if you're trading this towards the top side, you could be looking at using a little degree of risk management in there. Now, it is worth pointing out that, of course, the recent high in terms of the MACD came in without that divergence. You know, it's just here on the RSI and the DMI and the stochastics and the no sure thing indicator, but it's not there on the MACD. So, you know, what I'm really getting at is that if this what I'm getting at is if this doesn't hold for us here, which is really, you know, important currently, this previous area, then it's not good. So yeah, we've done it now. Right, cool. So that was everything that was requested. There was another coin I was going to take a look at, I think, as well. Artie, hi Artie, mate, good one. Hello, Outcropticians. YouTube algorithm tried to pull a fast one on me. Does that algorithm, I've had words with that algorithm in the past. Good. I got some flow a couple of weeks back when trying NFTs to buy. I got some on Superfarm today. No cards though, cause I got outbid on Degen Whiffy Elio Sexy Sidekick in thigh length boots. Cool. Cool. Right, nice one. Excellent. Like I was saying, I am looking at putting together my own cryptocurrency project. When I use the word "my," though, that's of course very, very loosely talking about "my," because what we'll be doing as well is obviously using a decentralized basis for it. Anyway, more chat with that coming up in the near future. Hopefully, details on the funding round stuff and how to get involved this week. Hopefully, right. We've talked about the divergence. We've talked about everything on that chart. We know that there's 20% retraces in this one frequently, that you're better off getting in on one of those retraces. Yeah, you might have to wait for a week. And then afterwards kind of trying to, you know, decide how you want to live your life at that point. Hopefully with a degree of kinship and harmony. If there had ever been any gaps on the chart, then today's price action on the Ethereum CME's future chart would have covered all of those off in a 1 hour, wouldn't it? This entire price action is the classic reverse triangle pattern. So this is a real classic here. Just kidding. No. But what you can say is that the price is very much increasing its range and also its potential volatility, you know, here over on the CMEs. Therefore, you know, if we give this the benefit of the doubt and assume that this is like new participants and whatever else, then we're providing more and more liquidity, kind of filling out this VPVR. This is something that's just never existed before, and it gives more scope for movements around different price points without having had the gaps that was sort of gaps city before, as we had, you know, back here around Valentine's Day, for instance, with the old simmies. Anyway, the positive story is super visible for us there in terms of the CMEs launched and the prices didn't immediately capitulate and crash. The negative story is also super visible for us there in that the CMEs launched and the prices immediately capitulated and crashed. Right, agreed. Okay, because I mean, overall, if we were looking at something like this and we hadn't seen Ethereum prices going back up above $1,600 over the period of the last 2 weeks, then everybody would be talking a very different story, right? And indeed, the story, if you're hearing a story out there which is along the lines of this, where we've seen the price of Ethereum not dropping down below the $1,800 area for the last couple of weeks, be a very different story as well. But instead, what we are looking at is this narrative here. And that's not that much of a surprise, really. If you look at, for instance, coming over here to the total market cap and seeing the real stretch that we've had here, coming all the way down towards the lower end of the Donchian channels now, not taking out the 24-hour type period ones here. Come on, load up. Yeah, not taking out the 24-hour period ones, not even taking out the 12-hour period, low end of this, but certainly doing it on the 4-hour period, showing you that massive increase of volatility towards the downside, which stays within the overall market structure. Wove, like, you know, like this is the total market, as we see the Bitcoin price in itself having gone up, and then experienced all of that itself as well in terms of going down towards the lows there. So so that's the story for us. What we're looking at with gold, by the way. Gold, nice recovery during that period. Just a little contrast for you. Digital gold say no. Digital gold say no, I don't think so, not today. Hard gold says yes please, and has now arrived up at a point of resistance for it again. Okay, and looking at this without anything on here, gone past significant points towards the downside. We haven't managed to do the inverse of that by taking out significant points towards the top side, and that's where we have it. Okay, so everybody, thank you so much for joining me. We are now at the end point of this show. This is where I say thanks to everybody who donated to the channel, and of course good big shout out to the likes of all of the patrons out there that have recently joined, you know. So thank you to all of you guys, and as well to anybody who wants to continue to help support the channel. A reminder of that Patreon address, which is a stick up there, and then we will do the reverse roll call and give everybody a last minute chance to get in on any coins that they want looked at, and I will tell everybody about how this week as well. Yeah, so I've been asking people to get in touch with me if they're interested in cryptocurrency, which all of these are. So, you know, have to filter that a wee bit more. And you are also interested in getting involved in a cryptocurrency at an early stage, where, of course, you know, you're going to be able to influence the future direction of that project. And as well, if you want to, you know, get in touch with me and all the rest of it, find out about it. Everybody will be finding out about it, of course, down the line, but just in terms of these real early stage things, how that could go. Now, of course, what we'll be listening out for, keeping our ear to the ground for in the future when we develop this thing, will be mass adoption, right? Looking at this right now, you can see that there is myself here, there's all of you, and then there are all of whoever you have in the room with you right now, and then 18 other rooms, 17 other rooms, now one less, of people watching this at the minute. So you guys know, so of course I'm looking forward to having all that discussion with everybody as we develop this together. And then, you know, when there's a lot more interest, because there will be probably then of course we can, it wasn't out there on a live stream publicly for everybody to come along. There's no paywall to get access to this live stream. The guy that's talking about setting this thing up also has a premium group where there was no paywall to get in access to. So you're talking about something that costs nothing turning into something that has a value. And is that achievable for us together as a group to set the wheels in motion to achieve something like that? I certainly believe it is. I believe in all of you. I believe in your ability to learn technical analysis and to conduct yourself efficiently in the market for whatever that means for you as you become a lifestyle trader. I really do appreciate every single last one of you for having joined me today for today's live show. It's really great actually to be sat here a week after Valentine's Day, and while there was a big drop down in the market, it wasn't like what we saw last year yet. Now let's actually just at the final seconds of the show just remind folk what we were looking at last year. Okay, just let's take Ethereum for example. In fact, most people would probably be familiar with Bitcoin, right? So we'll just do it on Bitcoin. We'll hide this off. This is really worth mentioning, just so that people know, just so people can put into context, even if you're only getting involved in crypto for the first time now, for instance, and then this causes a degree of FOMO, if you like, or regret for not having got involved in it last year, etc. Whatever, don't feel like that. You're starting here, if you are new-ish, is a lifetime journey. So if you're going to kick yourself about not getting involved in crypto back here, kick yourself for not getting involved in Apple stock. Whenever at the end of the movie in Forrest Gump back in 1997 or 1984, he says that he got rich off the back of investing in Apple shares, right? And since then, woof, my goodness, if you'd watched that movie, gone home and invested in Apple shares and said, I want to be like Forrest Gump, in 20 years time I'm going to be an Apple millionaire, I don't know anything about this company but it sounds good to me, you'd have done it by now. Okay, so don't feel any regret about not getting involved in crypto last year either. There's always an opportunity, always one. Anyway, reminders to focus that we had this upward price action, everything looking very, very good. It was lovely. Valentine's came in, we saw a retracement in the price action. Yeah, it wasn't the end of the world, and we were looking at things like saying, well, hey, look, Fibonacci wise, we came down, we hit off the 236, we moved back up the way, it's okay. Then we came down below the 236 and came back up the way. Well, meaning this is a head and shoulders showing up in the charts here at this stage. Obviously now we can see that, obviously, but at the time, you're like, oh, hey, maybe there's a chance here. Anyway, see something like that happening right now for us, and well, you know what the story is, right? Okay, you know what the story is thereafter. Okay, but that's not where we are right now. It's not where we are right now. It's not where we are right now. Not right now. It's not where we are. Which one do you want to draw it in from? I mean, you can use the all-time and all the rest of it, but there's no point. There's no point. It's just that it isn't where we are now, like I say, right? And that is the bottom line. Okay, listen to it. Listen to it. Listen to it. Can't figure out what your name is. Maybe it's because I'm the one that's saying your name, and it's not because I'm hearing somebody else say it. I don't know. Artie Pile, I'm in. Tradesbond, Rocky, you've got a mail bud. Oh, sweet, great, fantastic, great, nice one, excellent. I'll check all that after the stream. By the way, for everybody who is tuning in here and chatting away and watching stuff and part of this community, I want to say a massive thank you for being a part of this community, and as well to continue to introduce this community to your friends. Everybody in here is dead friendly. The fact that somebody can turn around and say to me in the stream, you've got a mail bud, that's great, isn't it? That's great. I'll go and check it later on. That's what we're like right now. Now, I do know that in the future it won't be like this, okay? It won't be like this, and it won't be scalable for everybody. I can't respond to everybody all the time, etc. But isn't this wonderful? I'm so pleased to be involved in this community where we can really talk about things, and really achieve something. So we might not have the same scope as larger communities out there, that we have this, and this I think is worth an awful lot, certainly worth a lot to me. Okay, I know, listen to it. I know, I was kidding, listen to it. I was just joking. Jeepers creepers. Big solar guy owns a solar company. Square footage needed is unreal, even measures in meters squared. Wow. Guys, girls, ladies, gents, fantastic. Thank you so much for joining me. If you want to get in touch, you can do it through the Discord. If you want to be part of a premium channel, which I would hope that you would also feel like contributing to yourself in terms of bringing your own technical analysis ideas to the table, you can find that in the Discord. Now, I'll have to put a couple of posts on for this week, but the last ones went fairly well overall, so that was decent. Worth being a part of, I would say. Then you have as well the Patreon thing. That's a link which you can find in the description down below, along with various donation things and all that sort of good stuff. You have news coming out this week of crypto stuff that we're doing together, so that's cool. And you have my love and appreciation. So let's do the reverse roll call. Are you guys in on Graph? That's an interesting enough cryptocurrency. Coming in just at the dying embers of the show, buddy. If you donate to the show, I'll do the TA on it or whatever, chat about it. But otherwise, I'm running through the reverse roll call. Thank you so much, Artie Pyle, for joining us here for another show. Just found another box and it's full. I'm wondering if that is a box of chocolates, because that would be nice. I could do with a box of chocolates myself right now. In fact, after this reverse roll call, I'm going to have a cup of tea and a chocolate bar, right? So can you imagine that that you're going to have to tempt me very, very strongly if you want me to take a look at the graph or anything else, because I'm getting out of here soon, guys. Zoner, thanks for tuning in. Dan Anthony, love you too very much. It's great. We're all going to be rich. Yeah, we're all going to be rich. It's all going to be fantastic. But not only that, not only all of that good stuff. I'm not a financial advisor. None of this financial advice. None of what I say could be considered to be investment or tax advice or any of that. Do not misconstrue it in that way. It's all just entertainment and educational purposes only. Yeah, we're all going to be really rich together, and it's great that, because we have got all this joy in the community, so that's really good. Do you know XDC? It's the coin that looks like you've your finger slipped whenever you're doing one of those emojis, you know, that's supposed to be like the really laughing face with the big mouth and the two eyes that are squished up and the big mouth laughing, and then your finger slipped and you hit C by accident, which is of course near D on the keypad. You can tell I really want that cup of tea. Michael John Scott for Micah, good guy. Thank you so much for joining me again. Chococo Bo Choco. Don't stop tuning in, mate. I love saying your name at the end of the show. My goodness, that's always a good laugh for me. Schiff hates crypto, he says, but he still has value and he knows it. That's why he accepts it. I've said for a long time that Peter Schiff has bought crypto all the way along the way, all the time. He was buying. What I think, my guess of how much he was buying was $8,000 a month on average throughout 2017, 2018, 2019. That's my guess. I don't know. So, TradeSpawn, thank you so much for joining me. Really do appreciate it. Nav and Ethan, thank you again as well. Thanks so much for joining me. I reckon you can probably get a cool $1,000 for my card. How fantastic is that? That's quality stuff. Marcin, hello. Ho, nice to see you there. Zoner, again, another hi for you as well on the way out. Andrew Davidson, Rocky, you're a boss man. That's what you said earlier on. I'm going to hold you to it. You're fired. No, you're hired again. You see, that's just how much of a boss man I am. Thank you for tuning in today. John Torpy, thank you for tuning in as well. I did end up looking Cardano up in the end. It made it there eventually. Brandon, the Garden Prophet, thank you thank you for tuning in here. Kieran Mulholland, your DeFi guide, good to have you here as well. Haha, awesome intro. Yeah, I'll have to check out your channel sometime and see what you're talking about in terms of DeFi and what you're not as well. Give me a shout out on your channel if you do have one. If you do, if you don't, then you don't. K-Doc, thanks for tuning in, buddy. It's always good to see you. Jonathan Range, thank you. Hey, told you I'd log into another account to boost your likes. Haha, it says. Cheers, John. Stanley Knife, good evening, my friend. Thank you so much for tuning in. Should have given you a shout out earlier on, but I didn't. Miner One, I got a bag of one. What's your thoughts on that coin? He says. Hey, folks, I got a bag of one. What's your thoughts on that coin? I have lots of thoughts on the old Harmony there. I think it is a super interesting one. It was a really good shout that TradeSpawn put out for that one a couple of months ago now when he was on the live stream with me. And if it wasn't so late in the show, I'd do that for you if you didn't. Actually, no, what was I saying? He said this ages ago, so I was busy doing other people's stuff at the time. Lord Verhoeven, you are a boss as well, and thank you so much. By the way, thank you so much to Dan Anthony and yourself for that donations that you made to the channel today. It's always appreciated. Currently, it's going towards a microphone fund. That's right. I'm running this channel as a business, and whenever I get my next payout, I will hopefully be able to get a microphone at some point, so that would be cool. Better audio for you, means more people viewing the channel, means more likelihood that we're actually still doing this thing next year and all that good stuff. Oh, speaking of which, 10 patrons would be quality if we could get to that this month. I know it might not happen straight away and all the rest of it, but if it could happen, I'd be super over the moon about it. Looking to get on average 10 patrons a month to keep the channel alive into 2022. That's kind of a rough figure of what I'm kind of guessing at needs to happen. And here we have them, the credits. I spent ages trying to find them. Are they gonna work? Very good. I need to update this to include other people who want to be included in the old what do you call it, Patreon list that I should be putting on here. If you want your name included in this, then let me know, and I'll include it in there. Thanks, Rocky. Bringing some mate over to the community next few days. See you in the Discord sometime soon. Cheers for another quality show. Thank you so much, Formica. Really do appreciate it. I hope you enjoy the chat that we have here. Nice to see it taking out its previous high in the 1 minute time frame, isn't it? In that structure that we're having at the minute. But then looking back the way, we've still got a ways to go. Thanks so much for tuning in, everybody. I'll see you in the next live